Nicholas Knapp. I'm the president of CohnReznick Capital. I think for the key drivers, what we had last year was a fair amount of uncertainty, policy related. And going into this year, most of this is cleared up. Between wind and solar, you have the tax reform done. The trade case is settling in terms of people pricing for it and planning around it. And we had heightened M&A activity. Some of it was delayed and coming into this year. Some key closings in the end of last year, and I think we're going to see a couple more probably in the second quarter of this year and third quarter of this year. We saw a ton of activity on the platform, development platform sales, and there's the secondary aspect of what happens when strategics acquire these platforms and bring in passive money as well. So there's probably, we would say, 3 to 4 more materially sized development platform sales that will happen this year. And we don't know, after that, there's not a lot of developers with a long term of history of commercializing assets at a material scale. So after that, we think it's going to shift to infrastructure investors moving further into development to capitalize these developers, the smaller developers. And moving into kind of these buyers are large international energy strategics. They are hungry for scale, and I think the result's going to be they're going to take more risk going into further in development, acquiring, at the corporate level, and the result's going to be less projects in the market for standalone project sales for the passive financial investors. And I think what we'll see happen is the financial investors linking up with the strategics for more of the passive equity sell downs on the operating projects. Yeah, so I think I touched on that a little bit. For the most part, what we've seen over the last couple of years, I would say, is more the largest energy companies in the world, and so some of these being primarily known for oil and gas and midstream, some of them mainly power generation, but overall, anybody touching energy is now focused on renewables in a big way, and the U.S. provides a scalable market that's relatively efficient. So I think this will continue with large international names really dominating the space. And for the recent trades that have happened between Energy and Anji, and I think that the next couple to be announced will be a similar dynamic, where you have these names really coming in with the only way they can hit their targets and what they're looking for volume is to acquire these platforms. Otherwise, you're going to be competing with very low cost of capital on a project-by-project basis. So I think we see this play out with the market consolidation going to these large international strategics.